Hello and welcome to the Monday Futures Market Outlook for August 8th, 2011. This is Patrick Serezna. For those of you that have not had the opportunity to try out the eMiniSource.com trading room, a 5-day complimentary membership is available on the website. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and we plot an 80-week moving average on there. It does a very good job to depict a bull and bear market cycles the market has gone through. We were suggesting that so long as any pullbacks that occurred in the summer here were contained to the 1200 area on the downside, that in fact the market could turn bullish and have a solid year-end rally. We find ourselves this morning with a solid break below 1200, trading down towards the 1160 area on the downside of the S&P. This begs the question as to whether this actually marks the beginning of now a reversal and subsequent multi-year downtrend on the S&P, if not a multi-month downtrend. Really at this stage, even the first wave of selling, it would be too hard to initially tell, but it would be all about the magnitude of the next rally. As soon as this market hits some sort of a short-term bottom, we're going to get a market bounce, and it'll be the way the market bounce and the subsequent selling develop that will tell us everything as to whether or not we're destined to trade down towards the 1,000 level on the S&P. Some key intermarket observations. The primary trend of the market remains bullish only by a hair, where we're looking for that second quarter correction, which is now spilling over into the third quarter. It is absolutely crucial that the bulls find support at the 1200 area. Even this temporary break below it, long as over the next day or two we're back above 1200, it would be fine. It would be any prolonged period below 1200 would really open up that window to a decline down to the 1000 to 1050 area on the downside. Beyond gold, commodities continue to weaken. We see now solid reversals in copper and oil. We'll see those charts shortly. And bonds are also a crucial overhead resistance. This is a place where we could naturally see bounces occur, but the US dollar as a whole refuses to break down. If for whatever reason there was a breakdown in the US dollar, we would see that remove downward pressure in oil and copper, but nonetheless, US dollar very well may stay stable in these zones for even a couple more months. When we take a closer look at the S&P 500 on the daily charts, we see that we're now coming up to a critical support line around this 1160, 1170 area. Really below there's a small pocket of support that's going to come in around 1140, 1120, and then obviously there's even the round number of 1100 that could potentially find initial support. Nonetheless, we are looking for a short-term bounce at some point here. The markets are extremely oversold, and really all the bad news is out there. So at this stage, once the market finishes pricing everything in, at some point when the market stops making lower lows, buyers will come in and create a very solid counter rally move that could very easily come right back to the 1250, 1260 area on the upside. Nonetheless, we'll be watching where the initial lows come in. When we take a look at that US dollar index futures, we continue to be stuck in this sideways range-bound market on the dollar index, and really at this stage we're continuing to see where and how all these short-term rejections occur as it's bouncing back and forth. If the US dollar for whatever reason broke down based on the downgrades and subsequent selling, we could see a break of that 73 level, push all the way down to 72, 71, which would help commodities to stabilize for the short term. But so long there is a legitimate chance here that the US dollar stays relatively range bound over this cycle. Next here, we're going to take a look at copper futures, and copper has strengthened for an extended period of time up towards the 455 level on the upside, but as soon as last week's selling kicked in, a reversal candle came down, and then suddenly 5 days straight of selling wiped out almost all of the gains that were made over the last 2 months. We're going to find some short-term support in this $3.90 to $4 area, but if copper can't make any progress on any counter rallies, there could still be further selling in copper coming in the future. Next year, I want to take a look at gold futures, and gold continues to progress higher. We were looking for a measured move to go even as high as the 1750 area on the upside. So long as the markets stay in turmoil, gold may continue to further advance, but consider the move to already be complete. So in other words, we want to focus on profit taking gold into this rally. Next year, when we take a look at the crude oil futures contracts, that breakdown in crude oil has now seen follow through, selling down towards the 83 level. The measured moves and a number of support lines can have oil trade all the way down to the $78 to $80 area over the next over this week. At some point, we will probably get a crude oil bounce, but a clear downtrend is now in place. Next year, I want to take a look at the 30-year Treasury bonds, and essentially on the pivot break of the 26 to 126, 127 level on the upside, created a massive 5-day rally that saw Treasury bonds hitting near their previous year's highs. Really, at this stage, there is some significant overhead resistance, and bonds should take a breather, and we'll see what would arise from that. But so long as there's only sideways consolidations in Treasury bonds, there is room for it to still break higher, but we'll be watching the degree of the selling. That was your Monday Futures Market Outlook. Thank you for joining me.